Welcome to India Market Open. I'm Samina Nalwala, and joining me is, as always, Deven and Niraj Shah as we gear you up for trade on the very first day of the week. Good morning. Niraj, I believe we've got lots of excitement lined up. It's a new financial year. It's the brand new week. We're coming out of a pretty solid week of trade as well. And there'll be a lot to expect in this week as well, from auto sales data to PMI to RBA policy meet. A quick look on implied Nifty, also indicating to a positive start this morning.
Yeah, and you know, just before we get to the whole roundup of the global picture, and good morning, Samina. Just before we get to that whole global roundup, just a brief update of what's happened thus far in the March series and how April could hold us in positive vein. So I think that is to be watched out for. So look at what the March series did. For example, the Nifty index futures rollovers were at 69%, which is lower than the 3-month average, of course, but there was weak market breadth, 46% single stock futures rose versus 66% in February. So we had market breadth which wasn't the best in the current series, in the series gone by. But the implications for April, and if history is to be believed, there is probably very good times ahead or good times ahead. Let me put this into context. Of the last 16 years, 11 of the 16 times, there has been an average gain of 4.81% for the Nifty on the 11 times that there has been a gain. But even if you count the 5 other times when there have been losses, so 16 times, 11 times we've gained, 5 times we haven't gained. If you take an average of the total 16 times for the month of April, the overall average returns are about 2.95% for the Nifty. Samina, from 20 to 400 or 500, if we get 2.95% on average, or if we have a positive month like the 11 times have been, and if we get an average of about 5%, I don't think too many people will be complaining.
No, I don't think anybody is complaining. And if you just put this in, just looking back to what we'd had a glamorous, phenomenal 2024. We ended the year, interestingly, quite well. March was a month of consolidation. Most of us were expecting the markets would cool off. Interestingly, the last few days came through really well on healthy volumes, right? You did have the Nifty, the Sensex gaining. Broader markets resumed the outperformance. And I was looking at some of those numbers from F524. Niraj, Tata Motors, Bajaj Auto, Adani Ports, Coal India and Hero Motor Corp have all vaulted over 100%. These are Nifty 50 large companies we are talking about. I think barring HUL and HDFC, which concluded the year in the red, declined 10%, every other Nifty count has actually gone home with pretty solid gains. As we go into this brand new year, the excitement is there. The FIs are back after a short hiatus. 35,000 crores of equity was bought in March. So all in all, I think we're setting ourselves up once again for a pretty solid April.
Yeah, so that's the romantics within us, which love talking about what the year has gone by. But the focus should also be on how the year shapes up and what are the global cues in store as well for us.
Yeah, absolutely. Hi, guys. And
good morning. We've swapped sweets. How are you?
It's quite nice here, actually.
You're enjoying it good.
So it's, I think global cues have been pretty positive. Calendar year quarter one for global markets has also been pretty good, and I think that's an important data point to look at as we look at what's next, because obviously all of this historical data we're talking about today is in the context of what's coming next. The big factor for India continues to be, one maybe important point at the end of the week with the RBI not expected to change much, and then you have elections. Up to there, maybe a bit of a pause in FI inflows, a wait and watch on the markets, and after that, things could really change and zoom up. But having said that, let's take you through what has been happening across the world. US markets have closed in the positive on Friday. S&P and Dow, in fact, have closed at record highs once again in Friday's trade. And we were talking about how the first quarter calendar year has been for the US markets, and it has been stellar by all historical accounts. So, for example, the S&P 500 was up 10% in the first 3 months, the Dow up 5.5%, the Nasdaq up 9%. Nvidia was the big star, of course, 81% on that stock in the first 3 months of this year. So what has been happening over the last few days? And, we had a truncated week with 2 sort of long weekends bookending. So let's say you're back to business today. What has been happening? The data you need to look at is US payrolls will possibly hit the 200,000 mark for a fourth month. That's making those who are hoping for a quick Fed cut a little uncomfortable. You're seeing that in the bonds as well. So the 10-year Treasury, for example, was 4.21% on the back of that jobs data. Inflation data came in on Friday. It was Good Friday. It's in line with what was expected, 2.8% year on year, 0.3% month on month. Brent and crude continues to be a little bit of a bother. OPEC Plus and now even Russia coming on board with the idea of extending production cuts. So you are seeing that $87 sort of mark on Brent. It's not going to bother us too much. And guys, this was a conversation I had managed to have with Hardeep Puri, the petroleum minister. And I asked him, 87.90, does it bother you? And he's like, no, not really yet.
Not until we hit 100.
Not until we hit 100, because things are sort of changing, and our push on renewable is, of course, the long-term.
But that's more long-term, right? And just talking about crude, crude is up 6.5% alone in the month of March.
Yeah.
It's up 10% year to date. So while that number may not be scary, if you just look at the percentage gains, they're actually pretty phenomenal and almost scary, I'd imagine now.
It is.
And there is no concerns on the geopolitical front, and you can weigh in on whether the concerns are for crude to be pushing up so much more. This is largely supply-driven.
Yeah.
It is
deep
these
insider.
OPEC Plus, these
Crude
OPEC
is a
Plus
deep insider
companies.
of what happens to geopolitics. Somehow, if it's not really
Is it a
perking up too
precursor?
much, I don't know. I mean, I usually believe that crude markets get it more right than wrong. And if the crude markets are not quite moving up...
But 7%, 6.5% in a single month?
Still, I mean, it's refusing to go above that $87 on the Brent, right?
So far.
Despite everything. So far. Yeah, of course.
So
we'll know when it moves.
So that was the perspective I also got, that it's a bunch of producers who are now deciding that we need to... it's a bit of a cartel in that sense. So that's the story on crude.
Just one important thing on the global piece before we move to the local as well, that Jerome Powell's comments on Friday Post, when he's saying that, yes, the inflation data is exactly in line with estimates, which is great, but doesn't mean that we need to do a series of rate cuts soon. So that was the other interesting
June is
piece.
soon or not is something we'd have to wait and see.
I think there should now be a separate course in understanding what Powell is saying and what he really means to say, because you have these very cryptic messages. At the end of the day, you have to watch out for what he does, because that's what really matters. Just a quick roundup of what Asia is looking like in the open, and important data coming in from China, which is positive. That's why you're seeing green over there. Leave the Nikkei out of it for a second, but Shanghai up 1%, because your manufacturing PMI for China has come up slightly higher than expected, and that will be seen as a positive. So you're seeing the Asian markets largely perhaps looking positive. Just a quick look at what flows have been like last week on the last, I would say, markets day of the week before, which was Thursday, and perhaps also reflecting how tepid overall volumes might have been on FPIs, but DIs lapping up, maybe year-end or financial year-end quotas to fill up. But now, forward and onward, Niraj, to what it's looking like right now.
Yeah, and I mean, it was... I think we spoke about this partly on the trade setup in Thursday's session as well, that what if there is some bit of short covering seen in 22,000 and 22,200, because that is where the call positions were completely jammed. And I think some bit of it was on evidence in Thursday's trade, wherein with the index moving up, a very strong set of short covering happened both in 22,000, 22,200 calls. And that kind of led the indices slightly higher, in addition to everything else that happened. And remember, banks actually did well. I mean, you had private banks participating, you had FMCG participating. And very likely that this momentum or this positive bias could continue. It's very rare that Bank Nifty has shown momentum in the last couple of months, led by private banks, in addition to SBI, of course, and faltered immediately the next day. So most trading commentaries that I read, including Dr. C.K. Narayan's over the weekend, seems to suggest that the positive momentum in the private banks might well continue. So that is to be kept in mind. There's a bit of a tricky call here on tech, because tech by far has been underperforming 2 series on a trot. Can it make a bit of a comeback with the global mood looking okay? And there being some brokerage uptakes that have come in. Morgan Stanley, for example, has given a positive target on HCL Tech and a few others. So, and there is the preview notes that have started to come in. So if tech performs slightly better than anticipated, who knows, there might be a trading uptick on tech. So that's to be kept in mind. And lastly, I mean, I'm guessing we'll talk about it in detail, but just from amongst everything else, we saw auto stocks. Consumption, by and large, do well on Thursday, FMCG, auto, and two-wheelers in particular because of the expected momentum. So it could be interesting to see what two-wheeler stocks do in the session today. So from a sectoral perspective, banks, autos, maybe a bit of tech, who knows, might all be in focus this morning.
Yeah, a tech rally is going to be interesting. If it does even kickstart, I think with Infosys reporting earnings, will be the first to be reporting earnings. It'll be interesting to see whether it's going to be buy the rumor, sell the news. It's expected to be a benign quarter once again for IT players. So even if you do see a pullback, it may be largely technical as opposed to low level or value buying any of these tech stocks we'll be seeing for now. Well, in terms of another important data point that came in before we went into the long weekend was India's core sector growth came in at 6.7% for the month of February. This growth, of course, the sectors that it covers is coal, crude, oil, steel, cement, electricity, fertilizers, and refinery products. And for the month of January as well, it was revised to 4.1%. So that was a data point that we had in. India's forex reserves continue to soar for the fifth straight week. Again, for the week ended 22nd of March, India's forex reserves stand at $642.63 billion. Important because we've seen what's been happening to the dollar-rupee pair in the last couple of days of trade. The rupee has been on a bit of a downward trajectory, largely because of dollar strength. And a few days last week, we even saw the RBI conspicuous by its absence. So enough ammo. If the rupee corrects further, you could see the RBI actually intervening, as always being the invisible hand supporting the local currency. But let's quickly move on to stocks and sectors that you want to watch out for. Auto stocks, Niraj indicated that two-wheelers will be in focus. Remember, analysts are expecting double-digit growth for two-wheelers, single-digit growth for commercial, for passenger vehicles, and commercial vehicles growth is expected to remain subdued. Auto stocks will be in focus on back of those numbers that will start rolling in today. So stocks like Tata Motors, Maruti, Hero MotoCorp, M&M, TVS, Ashok Leyland, Aisha, Escorts, and Bajaj Auto is what you want to watch out for in trade today, or rather for the rest of the few days. Two of my stocks that I keep seeming to catch over the last couple of weeks is RVNL and HAL. RVNL, once again, a big order win. They've emerged as a big sort of winner in lowest bidder for the upgradation of the Gorakhpur electric traction for about 148 crores. This comes in after they've also emerged as a lowest bidder for the project worth 95 crores for the NFR Construction HQ Electrical Construction. They're in a JV with Salsa Technology Engineering, and they've emerged again a lowest bidder there too for a $15 million project. So lots of order wins. RVNL has been in focus over the last couple of weeks on bagging multiple orders. Hindustan Aeronautics not too far behind. It's another morning, another order win for the defense major. They've signed a contract worth 1,173 crores with Cochin Shipyard. So both these counters would be what you want to watch out for in trade. HL has already seen a very sharp up move last week, but those gains and momentum could continue on HAL as well.
So a couple of stocks on my radar, and we were talking about IT. I love the story for Infosys. Have any of you ever got a huge tax refund and felt very excited about it?
Not to the tune of 6,000 crores.
I mean, wow. No matter what else they do this quarter, and yes, they will be kicking off the whole, season of results. For the quarter, this is going to be one highlight. Refund worth 6,329 crores from IT department. They really need to look at who's doing their books and did somewhat mess up there. But anyway, it's good news.
Yeah. We should find out who their chart accountants are.
So they have got this assessment order for the annual year 22-23 with a tax demand as well of 2,763 crores. The idea is that this will help. This will help one way or the other in this quarter. So you might see an up move there on Infosys just on the back of this. Of course, the larger IT story is a longer term kind of play that you'll have to assess.
So which is why I was saying today that watch out for IT today. Morgan Stanley on HCL Tech, target price raise, Infosys, this guidance uptake. We are entering a season wherein the brokerage notes will start coming in, previewing the IT companies.
Infosys is not a guidance uptake.
Not a guide. No, HCL Tech, this thing, and Infosys getting this revenue.
Yes, yeah. Infosys
right?
is a windfall.
So
they
today,
did nothing to
it'll be a today's
it.
move, but could be an interesting
one. Yeah. So Infosys done nothing. Great to deserve this. This is either luck or maybe poor accounting in the past. But anyway, Infosys one to watch. Torrent Power, another one. Samina was talking about all of these orders. They have a LOA for a wind-solar hybrid project, and it's a fairly big one. So you could see some move on the stock, 150 megawatts with a cost of 1825 crores. You will see revenues coming in the first 24 months. So Torrent Power is another one. Adani Green Energy is the other one that I wanted to talk about. Now, their Kabra plant is really going to be a game changer in terms of the amount of solar power it's going to produce. So it's operationalized an additional 163 megawatts of solar projects at the Kabra plant in Gujarat. And now the total capacity has gone up to 225 megawatts. A lot more because, typically after a long weekend, you have so much news coming in, but I'll stop at these three and then see if we have time for more.
Yeah, we'll find time for more for sure. There are 2 or 3 names that I want to highlight and then we'll do the second round. So top of my list, NMDC, watch out for that one. Iron ore futures have slumped to a 10-month low. And therefore, I would watch out for NMDC in the session today. Let's see if there's a bit of a negative reaction on this one. There is a note from Jefferies on GAIL. They have maintained and underperformed with a target price of 150, which is a downside to the tune of 17%, if I'm not wrong. The point that they're making, there's no change to PNGRB newly notified unified tariffs for the months of April and May, but the order does not take into account the higher costs for GAIL. And I think there is where the problem might be. They're also saying that the risk reward is unfavorable with the stock trading at about 1 standard deviation above long-term averages. So watch out for GAIL in the session today and 2 downticks. And then I'll watch out for Indostar Capital. Cohesion MK Best Ideas, which is a Madhusudan Kela entity, has bought about 7.6 lakh shares at 186 rupees a piece. Now, usually this name would evoke some response. The stock is not too far out from the levels at which the purchase was done. So watch out for Indostar Capital. Could be an interesting mover in the session today, in addition to IDFC First Bank, of course. But yeah, I'll stop at these 3 and then come back because there are more stocks that we need to talk about as well, guys.
Yes, so we've got a couple of brokerages, and I know you want to talk about. You want to start by talking about Jefferies and GAIL, and then I'll take the other ones.
Yeah, so I just mentioned that price of 150, okay. So downside.
So you've also got Citi that maintains a buy on Ambuja Cement, 645. Is the target price. There's a 44% promoter warrant converted inspires confidence is what they've said. They've got an underperform on GAIL, like Niraj mentioned. Apart from that, you've got a quick small one. We've been talking about payments being received in PNC Infratechs. Relatively small, but nevertheless worth a mention. They've received a payment of 250 crores in terms of a settlement agreement that was executed between the company and the National Highways Authorities of India under Vivad Se Vishwas to dispute the dispute that was under the scheme of the Government of India. So PNC Infratech could be one to watch out for on back of the 250 crore payment that has come through.
Yeah. Just a few more on my list. Canara Bank is one of them where you might see some price movement. They will be diluting a 13% stake in Canara Robeco AMC via IPO. They made that announcement subject to regulatory approvals, of course, so watch out for that. Honasa is another one. They have been diversifying and launching new lines and new product categories at quite a bit of speed, and now they've gotten into color cosmetics. This will be one to watch because that's really a tough space. You have multinationals struggling over there. So let's see what Honasa does. And Ultratech was another one. Actually, there are a couple with the tax notices of various kinds. Zomato's also got one. But Ultratech Cement has got a demand order of about 21 crores from Chhattisgarh government. This is not a tax notice. This is an order for failing to meet a minimum production target set, which is essentially when you have a partnership with the state government, you're given a minimum target that you need to produce, and prima facie, on the basis of this order, Ultratech Cement seems to have failed that. The company, though, has said that they will be contesting this order on merits. So those are some of the stocks that you want to watch out for as well.
Very quickly on Zomato, because you mentioned that. They've got an order of GST for about 11 odd crores, including the interest and penalty. It stands at about 23.26 crores. But again, they, as like you said, Ultratech, this one too will be defending themselves in the court, and they do believe they have a strong case. So let's see how that plays out.
Yeah, it just becomes difficult to call for a stock reaction on stocks
audits.
on back of these order wins or other tax notices or other notices. So Ultratech and Zomato could be negative reactions, but difficult to pencil that in. What is easier?
They're slightly different. They're slightly different.
Completely different.
Yeah.
But
one is IT department.
Which a lot of people have gotten. This one is
Your
slightly
end
different.
Again, they're also wrapping up
this is slightly different, so could be interesting. The one which is easier to predict is Infosys on that 6,900 crores.
All news is good news, and if the taxman smiles on you, why not? I love
But you know
that
what,
story.
guys? There is good news as far as India macro goes, and that's something that I'm going to be talking about on the editor's cut today. But Alex, over to you, because there is good news for India macro, maybe not so much for staples.
Yeah. In fact, I was going to start, Niraj, by saying to all the economists and to all of the students of economics, this is not an April Fool's joke. You've not seen this ever, but you might just see it for the first time ever. If I'm not mistaken, the current account deficit turning to a surplus in the fourth quarter.
Okay. Yeah.
We are starting with that, because how big of an update is that for the Indian economy, which has been seeing its deficit narrow over a period of time with the advent of IT services and various other exports that are taking charge, as well as the inflows that the country is seeing, particularly in the fixed income space. Bond market inflows coming through. But is that the clincher? What is pointing towards this surplus?
Yeah, so from the dark days of CAD numbers being so low, as both of you would remember 10 years ago, if somebody would have said at the start of this decade that India will be CAD surplus, you would have mocked, scoffed, smirked, what have you. And you're right, this is not an April Fool joke. We don't know if it's a done deal as yet, but here are two notes, and I'm essentially standing on the crutch of two notes which are saying that this could happen, Nomura as well as Citi, right? And here's what they are arguing. So Nomura says that Q1 24, which is the quarter gone by, may record a current account surplus of 0.5% of GDP. Citi's estimate is slightly different. I'll come to that as well. Let me wrap up Nomura first. They say that the merchandise trade deficit has remained capped unscathed by the Red Sea disruptions, and the services trade surplus is exceptionally strong, reflecting one strong IT exports that are happening and consulting gains that are happening. And in addition to all of this is the strong remittance number into India. Never mind what's happening or what may happen in Middle East because of lower oil prices, the remittance numbers are looking very, very strong. So, and of course in the note they say that they expect FY25 CAD averaging 1.1% of GDP. So they expect that FY25 will be a deficit again.
Will be deficit.
Yeah, it will not be a surplus. The surplus is restricted to Q4. But be that as it may, one, I don't think we've seen this, and two, I think, as many people have said in the past, and as you can argue, right, we don't want to be a country which is current account surplus, because we are a growth economy. We don't want to remain in a surplus for too long, because that will impede growth. So you want a current account deficit, but you want a manageable current account deficit, because it will not have any untoward pressure on the INR. So that's the prima facie basic economics. Just to round up what Citi is saying as well, they say that available data shows current account balance likely to turn surplus into Q4, something that Nomura is arguing as well. The numbers are slightly different, of course, and they say it mainly reflects seasonal improvement. You were asking about the cues for this.
Yeah.
So one, seasonality impact out here, seasonal improvement, which might have been accentuated by some favorable macros, like growth numbers in India, like remittances, like stronger IT exports, like stronger consultancy exports. So that is two. And they say FY25 CAD could well be below 1%. So Nomura is about 1.1% current account deficit for FY25. Citi is averaging about 0.7 to 1%. So yes, a current account deficit, but manageable. And the balance of payment will likely be in surplus in all 4 quarters in FY25.
Did you by any chance, sorry, before you come to that, did you by any chance look at the estimates for crude oil prices in those reports?
Yeah, so for FY25 that they are penciling it is 0.7 to 1, they are factoring in you would call it benign, 70s Crude priced in 70s. Now, if crude were to go to 90, 100, then it's a different kettle of fish. The numbers may move from 1 to 1.2, 1.3, whatever the estimates may be. But here's what gets interesting, and I'll make it very quick here. Beyond Q4, Q4 is surplus, great. What beyond Q4, right? I gave you a brief synopsis, but the larger summation is that they believe it will be range-bound, 1% of GDP, resilient global growth, particularly manufacturing activity leading to strong export volume growth. By the way, guys, European growth is picking up. And we spoke to Robert Sorkin on the morning show. He's speaking about this
City
as well.
Research.
Yes, City Research. Early 70s, the answer to your crude price, early 70s per barrel oil implies about a $20 billion YOY fall in the annual oil import bill. So that's factored in when they are taking in CAD at 1% and strong remittance inflow to aid the CAD numbers. So confluence of factors, but yes, I'm thrilled by the fact that something that people would have only mocked 3 years ago about CAD numbers looking very positive for India could actually be turning out to be a reality, even if it's for 1 quarter. And as I said, we are happy with being current account deficit as opposed to current account surplus.
And I just wanted to come in on the crude part of it, because you said $70 to $75 a barrel.
They're talking about 70s, early 70s.
Which basically means there could be output cut actions coming in this year, if that's the thing, because that's not what OPEC Plus is gunning for, right?
Yeah, but I would believe, Sajid, if global demand picks up, US, Europe, etc.,
the price will automatically go up.
No, prices may go up. The OPEC may then not be tempted to do cuts, because some people will say, okay, let's take advantage.
But that gentleman is a conversation for another day, because we're going to head into crude prices and where they're headed. And I don't think anybody at this juncture will be able to decide very
exactly,
or understand where it's heading. Let's talk about inputs, though, because that is going to be the second conversation that we're having today. We're seeing, and we saw the headlines, Sajid, just last week or the week before that, cocoa futures going to what, 10,000?
Yes, 230% up year on year.
And it's not just cocoa, it's all input prices. So what we're effectively saying is that with FMCG companies biting the bullet and saying, look, we're not going to raise the prices just yet, we're worried about volumes, is the time of margin expansion over?
It's more of an underperformance year for FMCG, if you look at that way. In the sense, in FY24, the index went up by nearly 19%, while the Nifty 50 was up 31%. And in the last 3 months, it's fallen by nearly 5%, while the index was up 3% odd. So it's underperforming the index by a big margin, and it is also now a neutral to underweight in many of the portfolios. For last 6 to 9 months, it's been that way, and it's going to continue that in FY25 as well, as input prices are going to go up. So prices for sugar, coffee, cocoa, edible oil, lab
for detergents prices, as well.
Lab, which is used in detergents, and some fatty acids which are used in soaps and detergents have all gone up in double digits.
In March?
In March, and over a period of year on year and month on month and quarter on quarter, they have been going up. So there is a double-digit inflation which is coming into FMCG inputs going forward, and that would mean that many of the companies' earnings are going to be hit, because on the EBITDA level they've been able to expand the margin, and they've been able to push prices by 5 to 6% last year. Will they be able to do it in FY24? It's very unlikely.
FY25, you mean?
Yeah, FY25 is unlikely, because there is a demand sluggishness which is coming in. Rural is just picking up. That's what we are hearing, that some green shoots seen. Demand in urban are little flat to marginally positive, which is there. So will they be able to push the prices across again in FY25? Is going to be a big challenge for me, because the question is whether you're going to go for volume growth or for margins.
And so far, what they've done is they've prioritized margin growth very clearly. Volume growth very clearly.
Yes, that's it. And they're going to, and many of the top companies are going to ensure that their market share remains the same, which basically means the volumes have to be the priority here rather than margins there. And if that happens, we're looking at earnings impact of 50 to 100 bips on the EBITDA level for many of the companies and across categories, which is going to come in.
Is it still the case that, and this is my last question on this because it's really straightforward in that, and I believe we have a report, viewers on the website ndtvprofit.com by our colleague Shah, who's spoken to a number of companies, and among them Parley Products is talking about 8 to 10% inflation in their commodity basket.
And they're not willing to pass on
prices. So the question is it what we saw last year and possibly also the year before that, is that domestic unlisted players, very small brands, particularly in the rural area, are pulling market share?
That's going to happen. I think downtrading is going to happen. Like we saw in 22-23, where we saw local players picking up a large chunk of the market share because they've been able to push volumes at a lower price.
Yeah.
And because at that time, FMCG companies were very firm on maintaining margins, so they lost out some of the market share to the local companies, and then they came into the market with volume, pushing volumes there. So we're going to see something of that dynamics playing out again here. It's going to be very, some of the regional players are supposed to, we should be looking out for some of the regional players, especially in the FMCG space. Not the soaps and detergents also, but some of the, snacks and others, because that's going to be something which will be, they will be pushing there.
So the final point, does it reflect in the values, in the valuation?
Shameless plug. Watch out for 9:30 a.m. today. We'll be talking to Abneesh, who will be giving us an insight on this. Yeah, it'll be interesting to see. I think depends on how they are mixing up the ingredients, price targets versus everything, and the commentary coming in for Q1. So I'm really keenly watching out for that. But more than that, I think the results will show, and we'll figure out at 9:30 a.m. today on NDTV Profit. So viewers, tune in.
The question that you need to ask is there a runway for FMCG going forward in FY25?
That's one of the questions that will be asked for sure. Abneesh Roy, Executive Director, Nuvama Institutional Equities, will join at 9:30, and they'll be talking about FMCG, so watch out for that. There's lots to talk about at the start of the new financial year. Before we head into trade, do stay tuned. We're heading to a very quick break.
back. You're watching India Market Open. It's expected to be a positive start as we gear up for trade on the very first day of a new financial year. Well, the last week of the last financial year ended on a positive note, with the markets gaining 1% and the Nifty comfortably closing above levels of 22,300. Agam is standing by with all the F&O action. Agam, it seems like we've respected and closed about 22,300. And if you do that and stay above these levels, new record highs around the corner. And Bank Nifty's participated.
In fact, Samina, we missed out on a new life high by whisker on Friday and on last Thursday. Pardon me, Friday. So was it Thursday? All right. Yeah. Well. So the last trading session was one of a kind, because we actually did see a very sharp up move, and eventually we just missed out on making a new life high by just a handful of points. That said, at the moment going in, where we do see about a near 1% increase in as far as the Nifty is concerned. Of course, the April futures naturally did see a lot of addition, and already at the start of the session, we are looking at about 224,000 contracts in terms of its open interest for the futures. Moving on, then the Bank Nifty as well did move up by around 0.7%. Well, remember that the benchmarks did close off their days highs, at least last Thursday. So, in terms of that, we didn't see as much increase in open interest as far as the Bank Nifty is concerned. How are the option markets looking? Let's take a look at how things did pan out. Now, perhaps on expected lines, as the Nifty advanced, we saw a lot more writing in puts, which is indicated by the red bars. And of course, there was a little bit of more call writing, but I reckon that call writing will have come through in the last hour of trade, when we in fact saw the Nifty come off by quite an extent. Moving on, as far as your overall open interest distribution goes, at the moment we are looking at a 500 odd point range. This is only based on open interest accumulation. On the higher end, 22,500, it was what we're keeping an eye on. That's based on OI calls, and OI puts will give you an idea of, 22,000 is where we're seeing that accumulation. We keep seeing the Nifty move in and out of the 22,000 mark. That's been the case, but the real question is, if we can defend this particular mark, can we expect the index to move higher? That's something that we're going to wait and watch out for. Finally, moving on to stocks, where we did see a lot of longs coming through in Cipla and Sale and Tata Consumer Products, and Persistent Systems and Chambal Fertilizers saw shorts. And in terms of stocks which saw unwinding, the list wasn't very long, and this was, of course, on expected lines, because, we're just very new into the April series, which means that we saw marginal unwinding in Shriram Transport Finance, Indus Tower, and Muthoot Finance. But what do we do with these cues, and where do we go from here? Let's get in an expert opinion here. We have Milan Vaishnav of Gemstone Equity Research, who's joining us on the show right now. Milan, good morning. Thanks so much for joining in. Let's start off with your views on the benchmarks. What are you expecting from them?
Hi, Alan. Good morning. From a technical point of view, and if we take a very, try and take a holistic view of the markets, I feel that Nifty may still take some time before it convincingly move past its previous high. So as of now, I expect Nifty to continue finding resistance between 22,500 and 600 levels. There might be a minor incremental high, plus minus 25, 50 odd points here or there. But by and large, I think Nifty will take some time before this all-time high levels are taken out with conviction. On the lower side, I see that 20-week moving average, which is placed at around 22,170, 177, has acted like a support over the past couple of days. And therefore, by and large, I expect that Nifty will continue to stay in 22,000, 22,500 points range, at least until this week's expiry on April 04. So I think that index will give us an opportunity to trade it on the other side. I see it oscillating in 500 odd points range. It might try and give an incremental high, but a convincing high above the previous level of 22,500 plus is slightly unlikely, and I think it will we will stay under a range-bound consolidation. In the same breath, I also don't expect any major downsides to occur so long as 22,000 stays defended.
Okay, Milan, so based on your expectation of consolidation, what option structure are you deploying here in the markets?
This is a bit of a tricky part. When I said that Nifty is likely to stay in a range, I would try and play a short strangle by selling April 04, 22,600 call and selling 4th April expiry 22,000 put. But now that being said, total premium that we will receive would be around 2.5 to 3% premium of the capital deployed. However, I'm not mentioning the exit price here because markets had closed back on Thursday and it will open today, so there will be significant difference in the option pricing. But at the same point in time, at the time of open, if we sell this pair, roughly we can expect a yield of 2.5 to 3% in terms of premium.
Sure. Okay. So a short strangle there as far as the Nifty is concerned. Milan, what about stocks? I believe you have an idea on ICICI Bank.
Yes. Basically, it stems from a top-down analysis. I feel that even if the markets stay in a range or even if we are under slight corrective pressure, Bank Nifty might show some relative outperformance as despite being placed in the lagging quadrant of the RRG, Bank Nifty is showing some improvement in its relative momentum vis-a-vis the broader market. So within that space, I expect ICICI Bank to do well. I am suggesting a bull call spread by buying April 1100 call and selling 1160 call. Maximum profit that I expect is in the range of 22,000 to 25,000, and maximum loss I expect is in the range of 9,000 to 11,000. Again, I am not specifying the exact net premium that you will pay because there will be a notable difference between what we have closed on Thursday and at the place where we will open today. But still, this is the bull call spread I recommend, and as a part of risk management process, instead of waiting for the entire maximum loss to take place, one can put a protective stop if ICICI closes below 1070 levels.
Okay, all right, there you have it. That's a bull call spread on ICICI Bank. Milan, taking a moment to thank you for joining us and taking us through your views on the markets as well as giving us a handful of trading ideas. And with that, it's back to you, Tamanna.
All right, thank you for that, Agam. So, a lot of exciting, cues to look out for today, and some of them are stocks that you should definitely be keeping an eye on heading into today's trade. Varsha has that list, starting with Aurobindo Pharma. Varsha, that's a big one, isn't it? The news flow for Aurobindo Pharma may see a stock movement.
Yes, so good morning, Tamanna. So yes, you're right. So if you see the news on Aurobindo Pharma is that they've commenced 4 state-of-art manufacturing facilities in Andhra Pradesh for few of their products, which include penicillin G, then 6 APA, and also some of injectable products and granulation. So yeah, stock may move after opening. Let's see what happens. Then the next company that we have is Garden Ridge Shipbuilders and Engineers, wherein company have notified that company's turnover touches a new high. So they've recorded a growth of 33% in their annual turnover for FY24, which is almost 3,400 crore. Now, Q4 FY24 revenue stands at 823 crore, which is almost a 37% year-on-year growth. Then we have Canara Bank, wherein they've accorded approval for initiating the process of diluting 13% stake by listing Canara Robeco Asset Management. Now, Canara Robeco is Canara's bank JV with Orix Corporation Japan, wherein Canara Bank holds 51% stake, and the MF average AUM stands at almost 79,300 crore in October-December 2023. Now, currently, if you see 6 AMCs are being listed, HDFC AMC, then you have UTI AMC, Aditya Birla, Nippon, Shriram AMC, and lastly ILNFS Mutual Fund. Then lastly we have Infosys, wherein they are expecting a refund of around 6,300 crore from Income Tax Department. Refund amount is almost 1% of their market cap and 28% of annual net profit. But they have also received assessment order for tax demand worth 3,000 crore. So net receivable stands at almost 3,200 crore for the company, although company is evaluating accounting impact on the financial statement. So these are all the stocks that one should watch out.
Okay. Vaishnav, just very quickly, this Suven takeaways and the implication on CDMO. I mean, what is the outcome therefore? Is Jefferies constructive on Suven? What is the thing?
Yeah, as we know that we did have an analyst call from Suven. So the good thing is they are expecting good orders from CDMO. Although 2-3 quarters may be, maybe not good because there's some lag effect. But yeah, from H2 current year 2024, they're expecting good orders from CDMO, and India will benefit mainly in small molecules on the back of China +1 and Europe +1.
Yeah.
Okay.
All right, so a lot of news coming in. Suven, Aurobindo Pharma, all of those need to be tracked. Tax orders are also in news. Not all of them might have any stock movement though, but interesting to mention. We talked about Infosys and its net positive impact, but SBI Life, for example, has a 5,300 crore rupee tax notice, tax demand come in, IOB about 620 crores. So yes, this is probably the tax department closing in and looping up those loose ends before the year end, but one to watch out for. The big story of the day, though, Samina, is autos.
It is expected to be an interesting one this time around. Auto companies will start reporting their monthly sales numbers starting today. Remember, analysts expect double-digit growth for two-wheelers. Commercial vehicles, though, could be subdued, but Puneet is standing by with more on what to expect. Puneet, it's going to be a busy few days with auto companies reporting their numbers.
Yeah, that's right, and we've seen that March is a very, very important important month in terms of sales to end the financial year for all these automakers. Now, do note that last year in March they had a couple of festivals, which was Navratri as well as Gudi Padwa in Maharashtra. So that generally is a very, very big driver for something like a two-wheeler for someone like Hero. So despite that, we'll see that for two-wheelers is one of the most positives across segments of cars, tractors, as well as commercial vehicles. We see that for Bajaj Auto and TVS are the top two, where they expect a big year-on-year jump of upwards of 15 to 19%. Do note that inventory levels for someone like Hero is higher of 40 to 45 days versus 25 days for the likes of Bajaj and TVS. This is generally a precursor to higher inventory before festivals, as I mentioned. Now, do note that for TVS specifically, the EV sector has done very, very well. They have roughly 2 lakh sales for the whole year, and they say that the new subsidy scheme which comes in from today has lower incentives. So before the incentives are higher, and someone like TVS as well as Bajaj has benefited a lot from TVS specifically for iQube and Chetak for Bajaj Auto. Now, moving on to the PV segment, we see car makers, all of them have done really, really well this year, and March is no exception. They expect upwards of 12 to 15% from the likes of Maruti all the way to Tata Motors and M&M. For PV specifically, they have seen certain slowdown in inquiries as well as bookings, but there are for discounts in the hybrid segment from Maruti for the Grand Vitara as well. Moving on to commercial vehicles, and we've seen subdued growth on a year-on-year basis for all players. We see that MHCVs, which is the medium to heavy commercial vehicles, have been on a lower and flat for something like light to commercial vehicles. We see that demand across sectors such as oil and gas has been subdued, and when the ordering picks up over the next financial year, that's when the demand for MHCVs will come back. And finally, we see for the tractor segment, this year has been really, really tough on tractors. Sales haven't picked up all year long, and this year on a year-on-year basis, it's no different for Escorts as well as for M&M. Now, agri demand will, for the usage will decline roughly 5 to 7%. But the non-agri is expected to decline higher by roughly 20 to 23%. So that's the overall picture of the March sales. This is the preview as well, and from in a couple of hours, we will expect all the automakers to report these particular numbers. Back to you.
Puneet, if you can just go back to the tractor numbers. Yeah. March seems to be a very good month. Just March. Year on year, it's poor, but look at March month on month. How do you account for that? Is this inventory management more than anything else?
Tamanna, it seems like inventory management generally on a year-on-year basis, it hasn't done well. On a month-on-month basis, both Escorts and M&M have increased their inventory going into the festive. Now, during the festive period, we've seen that, for the 100cc segment on the lower end of two-wheelers, as well as commercial vehicles and tractors, is a very festival-dominated sales. And that's where we see that, in the month of April, is generally good for these guys as well. So precursor to that, inventory levels do go up for players like Escos as well as M&M.
All right, thank you for that, Puneet, there breaking up all those details. And of course, he'll be back when the actual data is up. But I think the big takeaway is that two-wheelers are coming back, and now the data is supporting that hypothesis as well. Sudeep Shah joining us now. He's Deputy VP, Head of Tech and Derivatives at SBICAP. He's with us this morning. Sudeep, very good morning to you. Great to have you back on NDTV Profit. Let's begin with the outlook for the markets, actually. We're starting the new financial year. How are you looking at the indices? We've ended fairly decently. I mean, Thursday's trade, or the last trade of the last financial year, was very, very positive. Do you see that trend going?
Yeah, so very good morning to you. See, what I feel is that Thursday's close was extremely strong. 22,300 levels is a strong closing, and finally, after a lot of sessions, say at least 8 to 9 sessions, we have seen Nifty closing about 22,150 levels, which is the 10 as well as the 20-day exponential moving average. So I feel with Reliance, ICICI Bank, L&T, and a lot of these auto stocks looking good, Nifty could strengthen further from here and could head up to 22,550, 22,600 levels. And supports, I guess, would be in the zone of 22,150 to 22,200 levels. If we see the derivative data also, there's a lot of strong put writing happening in 22,200 as well as 22,300 strikes. So this zone of 22,200 will act as a strong support going forward from here on.
Sudeep, as we gear up for trade this morning, what are your top recommendations?
Yeah, so the first stock that I feel could do well in the current series or in the next few sessions is Eicher Motors. Now, this stock has witnessed an 11-week consolidation breakout and has closed at its highest levels post 1st January 2024. And the rollovers also here are very strong. So with a strong undercurrent visible in the auto space, I feel Eicher Motors can be bought with a 39.45 stop loss and a 4150 target on the upside. The second stock that I have is HAL, Hindustan Aeronautics Limited. If you see the short-term chart here, last 6 sessions, we have seen a good momentum in this stock. Higher top, higher bottom formation has been visible on the daily charts. And also on the rollovers front, I guess 94-95% rollovers have been witnessed, and that is very strong considering the stock. So a clean uptrending chart, I feel this could be bought with a 32.70 stop loss and a 34.50 target. As well as if this is crossed, then the next level also could be 3600 on the upside.
Let's get into some more stock-specific news right now, Sudeep. And I just want to talk about Prestige Group. News coming in, and fairly important sort of a new space for Prestige. They've entered into a landmark deal with ADIA and Kotak AIF to capitalize on growth opportunities in residential sector. They're going to be developing projects with gross development value of 18,000 crores across 8 cities. So across 4 cities, beg your pardon. So a big deal there announced by Prestige, and of course we will get the fundamental view on real estate and the Prestige Group, but I'm just wondering if you're tracking this on the charts, and what are you seeing happening here for Prestige, Sudeep?
Yeah, see on the charts of Prestige, if you see the short, long to medium term charts, they are extremely strong. In the short term, we've seen in the last couple of months, the stock was consolidating between 1,000 and 1250, 1230, 1250 on the upside. And recently in the last 4 or 5 trading sessions, the stock has once again strengthened on the extreme short-term charts. Now it has crossed its 10 as well as 20-day exponential moving average and has been sustaining above that in the last 3 sessions. So I feel overall 1125, 1130 zone could act as a strong support here. And given the kind of news that we are witnessing right now, this stock could rally all the way up to 1250, 1270 on the upside. And the long-term trend is very strong, and the short-term trend chart is reversing. So I feel it's a good pick with an attractive risk-reward ratio.
Sudeep, a couple of stocks that we want to talk about is IT really. Infosys in particular, they've had a massive windfall of about 6,000 odd crores. IT has been an underperformer, pretty much ripe for a technical pullback as well, I'd imagine. how would you trade Infi? If anyone's going to trade this fundamental news trigger, what are the levels to watch out for? Does it look like we could see a sharp gain on this counter today?
Yeah, see, firstly, before taking Infosys, let's just see how Nifty IT is placed. So we have seen a structural downtrend in the last few months in the IT index. Lower top, lower bottom formation has been seen. However, right now where IT index is placed is around 34,900 levels, and this is extremely closer to that zone of 34,300, 34,500 levels, the support zones in the last week of December and January. So the IT stocks are approaching their long medium-term supports, and I feel 34,300, 34,500 for the IT index could act as a strong support from here on. Now, coming to Infosys, I feel 1450, 1470 zone is a strong support now, and here the 200 DMA zone also is there. So, if there is a pullback, early morning pullback because of the IT news, for me, 1540 levels would be extremely crucial, because there is this gap left on 21st of March on that gap down day. So 1545 levels has to cross, and if these levels are crossed 1545, then we could see the stock extending its rally up to 1585, 1590 on the upside.
Another set of companies that we need to look at very closely, or stocks we need to look at very closely, is the auto pack. We've been talking about the numbers coming in, and two-wheelers at least seem like they will have a better set of numbers. That growth story seems intact. Anything you like in this space, Sudeep?
Within the auto stock, if you see, I feel Hero Moto, M&M, both are looking very strong now. So Hero Moto also, if we see the rollovers were around 90%, and the 3 months average rollovers is around 82%. So here the rollovers have been pretty strong, and the charts have been uptrending. So I feel overall Hero Motors from the current levels looks extremely strong, and the stock is consolidated for the last 1 month after a big uptrend. So from here on, I feel 4650, 4630 positionally could act as a strong support. Until these levels are held, Hero Motors could extend its upside up to 4950, 5000 in the first few sessions of the fresh series.
Okay, so those are, well, the view on autos. Now, guys, this announcement around Prestige is very interesting. So that is a stock to watch out for. Announcement around MCX is pretty interesting, the Morgan Stanley note. So that is something very interesting to watch out for as well in the session today. And a clutch of other newsmakers that we will talk about as well. I'm sure we need to slip into a break as well. But just before that, keep in mind, the implied open suggests the positive start. So there are a lot of stocks which might have a negative news flow to it. NMDC, Ultratech, Zomato, etc. Very interesting to see how they start off. Take a quick break. We'll be back with the pre-open session.
right, it's going to be an interesting morning. A number of stocks that we need to keep an eye on. And let's go through some of the brokerage notes that might have a play. Citi, for example, has maintained a buy on Ambuja Cement at 645 rupees target. They say 44% of promoter warrants converted inspires confidence. They expect 4,000 to 5,000 crores per annum for the next few years and expect a favorable swap ratio as well. For Ambuja, should there be a merger with ACC, and the firm will benefit from cost efficiency. Sudeep with us. Sudeep, I just want to get your take on an Ambuja and Ultratech, the entire cement space, and anything that you're tracking here.
Yeah, absolutely. So if we see the cement space, the rollovers have been very interesting now. Out of all the stocks in the cement basket, Ambuja Cement as well as Grasim, these are the only two stocks that have witnessed above average rollovers. So coming to Ambuja, I feel here the stock is in a big uptrend. There was a minor bump up in the mid of March where the stock retested 550 levels and quickly pulled back up to 600, 615 levels back to its closer to its all-time highs around 620. So I feel from the current levels also the short to medium term charts are looking extremely strong, and 595, 597 zone could act as a strong support until this zone is held. Upside up to 640, 650 in the coming few weeks could be witnessed.
Okay, we should focus a bit on this prestige development. I know we've spoken about it, but just as the flashes are now coming in and getting digested, for Prestige Group to enter into a deal with ADIA, no less, and of course there is Kotak as well, but ADIA, Abu Dhabi Development Authority, and ADIA is big when it comes to money, and we know Middle East is pouring money into marquee Indian projects as well in the last 12 to 24 months. But for them to do a deal with ADIA, a deal which could be worth 18,000 crores across 4 cities, I believe that's not the quantum of investment, that's the quantum of sales that could come in. But it could be interesting. It could be over a number of years, so don't mistake it for it happening over a period of 1 month. But the fact that it is one more deal that Prestige has entered into with a large money bag, presumably for a fixed return structure, I'm guessing, but we don't know the details of that as yet. The company will be best placed to come in. I would reckon that while I thought that Garden Reach Shipbuilders or PNB Housing could be the stocks of the day, Prestige Estates could well be added to that list as one of the top 3 or 4 names that could be reacting in the session today. And just interesting, just last month we broke the story of Prestige entering into a pact with Marriott for 6 hotels across India. Than this, so after selling off their commercial portfolio to Blackstone for reducing debt, Prestige is coming back very, very strongly, I would say, with some fairly marquee developments under their bag. Won't be surprised if the stock reacts positively today.
So last week, they picked up 60 odd acres of land in Ghaziabad. So that was a big mover. But I think, Niraj, what I'm very intrigued, and I think Samina pointed this out, and she said this is for a gross development value of 18,000 crores across 4 cities. Now, whether this is just India focused or are they expanding their footprint across the Middle East, I don't think can be ruled out either. So it wouldn't surprise me if going from the south to mid-India, to cities like Mumbai, Delhi, Dubai, Abu Dhabi could also be on the radar for all you know.
You know what I find interesting about this is that while you have marquee real estate players regionally, there is still competition and space for the big pan-Indian player to emerge even as you are in this real estate cycle. And for Prestige, which has had a great niche in the southern part of the country, now to foray like this, of course, devil in the details and execution, etc. But it would be great to have a conversation with Irfan Razak and understand what they want to do next. So definitely one stock to keep an eye on.
Yeah, just that one clarity, it's 4 cities in India that the press release says, and the deal, 18,000 crore GDV, 2001 crores, $240 million deal per se. So that must be the terms of investment or the money that is coming in.
Is there a timeline for this at all? Or that would be one interesting thing to see.
Yeah, it's a good question. No, I don't think right now they've given any kind of timelines with regards to this.
Prestige's record, a lot of this does get executed well in time. So they have managed to at least respect that 24 to 48 months. But for whatever it's worth, remember, the management had said that they were looking to close the financial year with a pretty solid top line. It's about 12,000, 13,000 odd crores is what they clocked in. And that growth will continue to reflect. We will connect with Irfan Razak at some point over the course of the next couple of hours to really understand what this deal means, what the timelines are, what is the kind of money that's been infused, what is the deal that they have with the Abu Dhabi Investment Authority as well. But Sudeep, of course, you've commented on Prestige Estates already, but Niraj, you want to comment on anything else on Prestige, or this is...
No, I mean, this seems to be the press release takeaways, yes.
Yeah. Sudeep, another one, HAL had a pretty solid run in the first half of last week, eased off, saw profit taking on Thursday, but back in the news this morning on back of a big order win. Technically, how does HAL look?
See, HAL has been one of my morning calls also, and I'm very bullish on this stock. Now, if you see the short to medium term chart, it is quite strong. In the last few sessions, in the last 5-6 sessions, we have seen a higher top, higher bottom formation also being formed here on the daily chart. So given this news flow also in HL, which is extremely positive, I expect HL to at least do 3450, 3500 in the next few sessions, and the stop loss for the same could be around 3250 on the downside. So a strong support placed at 3250, and the upside is quite open because it's an uptrending chart, and the rollers also here have been extremely strong.
Right. Absolutely. March auto sale numbers are trickling in. Escorts Kubota has that first set coming in. Total sales at about 8,587 units. And if you'd watched us from the start of the show, you'd see the preview, which showed exactly this, that you would have a drop year on year. About 16% of a drop year on year is what we've seen. Export units have also dropped quite sharply, about 23-24%. So Escorts is one that I would keep an eye on. But in line with expectations, because tractor sales have been muted, rural demand is continuing to be muted, and you'll have to wait and see that improvement coming in right now. Is this a stock that you're tracking, Sudeep?
See, if you see Escorts, Escorts in the last 6 months has been on a downtrend, right? After it hits its all-time high around 3450 levels, the stock consistently has made a lower top, lower bottom on the monthly charts. And I feel still it is in a downtrend, and for it to come out of this and change its trend, then levels of 2850, 2880 would be required to be crossed, which is the 200-day moving average now. So 2880 is the number that I would be looking out for from a positional perspective to spot a reversal on charts of Escorts.
Okay. Well, just mark the pre-open session before we go to Harsh for the key brokerage notes for the day. I wonder if PNB Housing Finance is starting off well. That stock has seen its ratings upgrade, so 3.5% higher for that one. I wonder if Prestige Estates, very close to the end of the pre-open session, is Prestige Estates starting off well, about a couple of percentage points, so watch out for that one. Infosys, and is that starting off well in addition to HCL Technologies? That's the key question. 1.5% up for Infosys, almost at the end of the pre-open session. HCL Tech not so much on that Morgan Stanley upgrade. And lastly, Indostar Capital Finance. Madhusudan Kela's name has come in as one of the buyers, MK Cohesion Ideas. That stock is locked on a 5% upper circuit, not surprised at all. Well, a slew of brokerage notes also coming in. Harsh Sehta, my colleague, Johnson, with the top brokerage notes to focus on this morning. Harsh, good morning.
Hi, good morning, Niraj. First off, ICICI Securities initiating coverage on Dynamatic Technologies. Very interesting note. Target price given at 10,250, almost a 37% upside to current market price. This one will definitely be in focus. What this seems to suggest is with regard to the aerospace segment of Dynamatic Technologies, they believe that is going to push both earnings as well as margins higher. Also, with regard to capex spending, they believe that capex spending has peaked. It's done fairly well with regard to capex now in terms of its divestiture for cash burning businesses, as well as the capex which has already been done in Germany is already fully complete, and therefore they believe that margins should improve from here on the back of that, as well as efficiencies kicking in. With regard to hydraulics and metallurgy divisions, that seems to be turning around as well, and that is the other positive they are looking at. Now, with regard to the numbers itself, EBITDA CAGR of 19% expected all the way through to FY27 and margins of 17 to 18% expected going forward. Quite positive on this one. They've based their target price on a 45 times FY26 EPS estimate. Quickly moving on, Morgan Stanley on IT, hard to ignore this one, Niraj. They believe that growth has bottomed out with regard to top line. Pace of recovery is lower than what was anticipated, but nothing that does not suggest recovery. Investor positions currently are still light, and that's where they see opportunity. Relative valuations also close to the 5-year averages, and they are expecting most large caps to register a revenue CAGR of 7 to 8% from FY24 to 26. EBIT margins also expected to improve. EPS growth to be higher than the FY22 to 24 period. They are overweight TCS, Infosys, HCL Tech, Coforge. They are currently equal weight on LTI Mindtree, underweight on Tata Elxsi, LTTS, Wipro and Tech Mahindra.
Okay. Well, thanks. So there's some interesting names out there, and like we said, the pre-open has settled on a strong note. The Nifty should come up on your screen. You know, the April futures was trading at 22,450 or thereabouts. We are on the spot at 22,455. So we're a stone's throw away from all-time high levels. Any which ways, it'll be interesting to see how the futures shape up. But like we said, amongst the big deals that got announced is Prestige. We are 4 minutes away from market open. So get in Rupesh Sankhe, Vice President Research, Elara Capital, on the phone line very quickly for this. Rupesh, thanks for joining in. What do you make of this deal? 2,000 crore deal for development value worth 18,000 crores. Big shot in the arm for Prestige?
Yeah, definitely, because the Prestige has shown a lot of aggressive move recently. They entered into Mumbai market, now entering into NCR market. So they have to, they want to be a pan-India presence with significant growth to capture growth opportunities. And definitely they have a portfolio of commercial assets under construction process. So they need capital for the growth. And if you look at the organized players are gaining market share significantly from 6-7% in 2004 is now close to 18-19%. And Prestige is going to be the big beneficiary out of that because they have demonstrated their capabilities and qualities, timely delivery in Mumbai. And I think it's going to be a big the move from the Prestige to garner market opportunity in the residential segment. So it's going to be a good move from Prestige in terms of getting capital for the growth.
Okay. Rupesh, what are, so based on this deal, does this alter your revenue, profitability targets or your rating on the stock in any fashion?
We are positive on the Prestige since 500 levels. And if you look at the GDP they are adding, they have already surpassed their FY24 guidance. FY25-26, we are expecting close to 15,000, 20,000 crore kind of a GDP value addition. So they are on a track to achieve that GDP value addition and close to 70, 80,000 crore kind of a target they have in the next 4-5 years. So they are on track. Going by this development, I think they are on track to achieve that GDP value, and definitely the market will reward them positively because we have just entered 3 years in the residential cycle, and given the inventory days, months which are coming down, the demand which is coming up, I think next 4-5 years we are expecting that residential upcycle will remain, and the large organized player like Prestige will continue to gain market share there.
Right, Rupesh, just one quick word, and I know this conversation is about Prestige, but when compared to peers, what is your outlook on the Prestige stock price, and what would be your top pick in the space?
Definitely in the Bangalore space, we are positive on Prestige because they have a significant project in the pipeline, and NAV has not fully captured the potential they have in the next 4 to 5 years. Secondly, they have ventured aggressively in the high Mumbai market with a JV and asset-light model. So they have mix of residential commercial assets. So we are positive on the Prestige. In the Mumbai market, we are positive on macro tech developers because they have huge land bank and which is not fully captured in the market price. So we are positive on the macro tech in the Mumbai market also. In the mid-cap space, we are positive on Mahindra Life space because now they are aggressively entering into capture the market. They were very conservative because changing the management. But now again, they have started going for a JV kind of model. So we are positive on these three companies.
Right. Very quickly, one last question. As of about 2 months ago, the unsold inventory for Prestige Estates stood at a whopping 16,000 crores. How important is this when an investor is looking at buying into this counter? And secondly, while I know they've aggressively been expanding their footprint pan-India, any worry on debt? How closely are you watching out on unsold inventory and debt for Prestige Estates?
Unsold inventory, I think they have some unsold inventory recently in the Mumbai market, but the kind of cash flows they will get from the existing projects as well as ongoing projects, I think they are well positioned to meet that debt they have there in the balance sheet and the debt which is required for the commercial assets. So I think once the commercial assets start getting rentals from FY 27-28 onwards, and existing operating cash flows from the ongoing projects, I think we are not worried on the debt equity front. Yes, definitely they have a slightly higher debt equity as compared to other players.
Right.
But that debt is mainly for the commercial assets.
Got it.
Unsold inventory, I think.
Got it. Rupesh, unfortunately, we'll have to thank you on that note because the markets are about to start, but much appreciate your time this morning. That's Elara Securities. By the way, news flow on Adani Ports as well in terms of cargo handling. Maybe that stock will react. We'll mark that. But here's how the markets are starting off this morning. Strong show. 22,470, about more than 0.5% higher. So good going for the Nifty 50. Bring up the mid caps and the small caps. Banks are, of course, supporting, and I guess private banks and SBI could be in focus. IT, by virtue of what Infosys predominantly is doing, is in the green, I reckon. But mid caps and small caps, well, strong showing. So we're starting off with positive market breadth. First day of the new financial year, 1.2% for the small caps. These guys are coming back. Let's get the heat map up on the screen. Very little red. Maybe an SBI Live not worth talking about. So metals are starting off well. Hindalco, JSW Steel, essentially leading the pack. Infosys, 1.8%, the heaviest weightage on the index, up about in today's session in terms of contribution. And Adani Ports, I saw 1.4% higher. Good going for that one. Adani Enterprises, there's a Jefferies note about the copper plant starting on time. And I think that is the reason why Adani Enterprises is also in the green. So both the Adani twins in the green today. HDFC Bank participating, SBI participating. Banks, IT, metals, Adani twins, you have autos, everything in the green. Well, I mean, reasoning notwithstanding, it's a brilliant start to the large caps. But Tamanna, I dare say, the mid caps and the small caps are doing even better. So your list must be even more powerful.
Absolutely. I mean, it's an exciting start for the financial year after what has already been a pretty big run-up. And you're seeing that reflect very strongly. You pulled up the indices, but let's look at individual winners this morning. Torrent Power is one of them. And yes, a lot of them are news-backed. But you are seeing positive momentum in the broader markets, definitely. Torrent Power up about 6% in opening trade. They've received an LOA and was on our list this morning. It's a 150 megawatt hybrid plant that they're going to do. So that's solar and wind, 1825 crore plant, and it's only an LOA, but still you're seeing that pop. Prestige, we've been talking about, that news came in pre-market. They are going to be developing projects worth 18,000 crores in 4 cities across India, and that's on the back of news already. A lot of news coming in from Prestige. You're seeing that stock react and climbing quickly, may I add. Even as we're speaking, the stock is up 4% this morning. Aurobindo Pharma is another one, we talked about it a bit earlier in the morning. 3% up. They have commissioned 4 of their state-of-the-art plants, which are going to make penicillin. Garden Reach, again, newsmakers because of order wins. Their company turnover has touched a new high. That's about 5% up. RVNL as well has got 3 order wins. So look at it. It's a good morning. If you've had a positive news flow, that stock is perhaps going to do well. And it's setting the pace perhaps for a good financial year going ahead, guys. So these are some of my top stocks. But what else are you spotting, Samina?
Interestingly, such a good-looking market this morning. The breadth is good, and that's what I think traders markets and investors are taking heart from. So while Taman has highlighted a few gainers, what's interesting to note is amongst the losers, you've only got a few losers on the Nifty 500, and the biggest losers only seeing a cut of about 1.5%, which is Aegis Logistics. So while the Nifty 500 usually sees big movements, the biggest loser in trade today is one counter with a cut of 1.5%. So that just goes to show you how the gainers and the losers are stacking up against each other. Apart from the ones Tamana highlighted, a few other names that are looking good this morning. You've got PNB Housing, 7% uptick on that one. On a ratings upgrade, the counter looks good, is getting excited in early trade with a gain of 7%. We've also got Action Construction, a big move coming in there, 4.5% on the stock on back of news flow from last week. HAL had a big order win. Let's take a look whether the stock is reacting to that news point. HAL is up another 4% after taking a bit of a breather in Thursday's trade. The upward move is resumed. The stock trades with a gain of 3.5%. Kalyan Jewelers looks good with a 4% up move. Adani Group stocks across the broader markets are looking good today. Adani Total, Adani Green, Adani Power are all trading across the broader markets, are all trading with a sharp positive bias. Adani Green is up 3%, Adani Total is up 5%, Adani Power and Adani Ports also seeing a pretty sharp up move. Adani Power up 4% in trade right now. Well, Tata Investments, we usually talk about the stock on a lighter note, but this morning, after a number of days of hitting lower circuit, Niraj, you'll be happy to know Tata Investments is up another 4% in early trade. No upper circuits there just yet, but the stock looking not too bad. Muthoot Finance, 5% up move. The counter looks good. You've got Welspun Corp up 4%. You've got some of your fertilizer names. So government-focused stocks may resume their rally today as we go into the election play. So anything that's government-focused, railways, defense, fertilizer are all in a sweet spot in trade. You want to comment on something else? Anything
Just
else
one stock. I don't know if you mark Dynamatic Technologies, but that stock is up 5% on that ICICI Securities note. 7835 and counting. Very strong start to this one as well. Well, Deven Choksey is also with us, Director of DRChoksey Investment Managers, and Sudeep is with us. Deven, thanks so much for joining it. Good morning. Deven, good start to the year, trading year. What are you watching out for? Auto numbers will start to trickle in as well today.
Yeah, Niraj. Good morning. Well, I think this year starts on a very promising note on few counts. On one side, we are expecting globally the rate of interest to come down. And that should be, I think, saying a good amount of positivity as far as I think the market action is concerned. On the other side, I think we are seeing some amount of positive development happening also on the geopolitical front, wherein the war-related situation is expected to, I think, find some way on a positive side. So that's where probably I think one is likely to see globally things are going to be much calmer than what we have seen up till now. India per se, the economy, I think we are likely to see the higher amount of growth momentum continuing, largely because of the government's thrust on the spending on infrastructure and also inviting the newer industries into the economy. Particularly, we are seeing higher amount of traction coming in from the renewable space and largely from the green hydrogen space. Somewhere, I think we are likely to see the positive development coming on these two fronts also. So overall, I guess I think on the macro front, the picture looks quite promising. As far as I think the immediate news are concerned, the auto numbers definitely, as you mentioned, should remain, I think, on a positive territory. Though on a month-over-month basis, I think there will be some small dip happening in some of the larger counters like two-wheelers. But otherwise, overall passenger vehicle segment remains promising and also the commercial vehicle segment. So we remain distinctly positive with the kind of possibilities, earning growth possibilities also going forward in this month and thereafter. We remain positive on all those fronts.
Right. Deven, let's talk stocks now. Prestige Estate, it's the biggest, one of the big gainers in the real estate pack today, up 4%. There's news that they've entered into a deal with Abu Dhabi Investment and Kotak AIF for 2,000 crores to increase their presence and build projects across 4 different cities in India. We don't know about the timelines of it, but the GDV of this deal is to be expected around 18,000 crores. What does this mean for Prestige Estate? It's last week as well, of course, they bought that 60-odd acres of land bank in Ghaziabad.
So, Samina, given the kind of developments that we are seeing across the country, particularly I think in the real estate space, I think the larger the ability to deliver the projects, better would be the possibilities of attracting money, and so would be the market capitalization rising. I think some of the stocks which are showing a good amount of clarity on this particular front, one of them definitely includes that Prestige, apart from the other ones which are larger ones in the Godrej Properties and Oberoi's for that matter out here, particularly Mumbai territory. So we believe that overall the opportunity size is becoming big for some of the larger companies, and that is the happy news from a perspective. As long as we see the commodity prices behave well and they don't show up ugly rise on the other side, I guess I think the margins are also likely to remain protected, and at the same time the demand scenario remains positive. So we remain distinctly positive. However, most of the real estate companies today are adequately priced as we see it. I think the valuation wise nothing is cheap at this point of time. Maybe the market gives opportunity during the corrective downside. At that time, the opportunity will be once again right for getting into the portfolio.
Is it becoming, Deven bhai, good morning, Tamanna here. Is it becoming more and more difficult to predict when this corrective downside is going to come? Because, you know, we've been talking about it, and now ahead of elections that might be tough. That, of course, is one question. But another one specifically that I wanted to get from you is your view on the entire auto pack. Do you think that two-wheelers is something that will lead the charge despite your EV incentives and your FAME incentives coming off?
Yeah, Tamanna, good morning. Well, I think more than the timing of the market, I think I would see the possibility of individual stocks giving you the opportunities. Because I think overall market to correct and then possibly expect every stock to find the lower level, I think is not likely to happen. At least particularly because we are in a very strong bull market and which is likely to continue for next 10, 12 years. So given that possibility, we'll have to look around for the opportunity in individual stocks whenever the stock price corrects or the time price correction takes place. At that time, I think there would be a buy opportunity. The name of the game is identify good quality companies and wait for your turn. I think whenever you get an opportunity, I think that is the time to buy into. Never get afraid to buy when I think it is a contra call. That is what the mantra that we would like to follow and we continue to follow. As regards the auto pack, we believe that the commercial vehicle remains absolutely convincing. We are seeing a higher amount of demand getting generated in each and every verticals of the commercial vehicle. And that is where probably we believe that I think this is one space which is relatively less volatile comparative to the auto in the other auto space. In case of two-wheelers, probably I think you might see on a month-over-month some dip in current month. But the fact remains that I think these companies are remaining absolutely very strong, given the kind of higher amount of money in hands of consumer to spend in the tier 2, tier 3 and down at the cities. I think this is the opportunity if at all market gives one to, if it corrected prices, I think to buy into good quality two-wheelers. Mind well, we believe that April and May, these 2 months, particularly in Western India, are likely to be very strong months for the two-wheelers. So any correction in the price due to whatever the monthly numbers comes out, I think would be a buy opportunity for the traders as well.
Sudeep, very quickly, two of your recommendations this morning was Aisha and HAL. HAL, of course, has already seen a pretty smart gap up of 3.5%. Quick update on Aisha and HAL?
Yeah. So see, Aisha, I feel it's still positive. It has opened positive and it's trading around 4025, 4035 levels. And I feel till the time it is sustaining above this 3950, 3970 mark, the stock has strong legs to move up to 4150, 4200 on the uptrend. The medium to long term charts are quite strong. So I'm quite positive on both these stocks, Aisha as well as HAL for the day as well from here on.
Sudeep, very quickly, are you building on to, if you were not long on the index, would you initiate fresh longs looking at the momentum?
Yeah, absolutely, Niraj. The kind of momentum that we are witnessing in the first 10-15 minutes here, it's not slipping below 22,470, 22,480, and it's we're seeing a lot of sectors now coming up. So steadily, I feel the zone of 22,480, 22,500 zone from an intraday perspective will be a strong support. And 22,550 to 22,580 levels can be witnessed till that's what I feel from the current levels.
Thank you so much, Sudeep, Shah and Deven. Choksey will take a very quick break, but before we head into that break, in case you're wondering, markets are having a pretty good start to the new financial year, rocking start. In fact, Bank Nifty up about 1% now. As Samina has pointed out, 49 out of the 50 Nifty stocks are all in the green, and the broader indices are leading the charge. What's the outlook, though, for the FMCG sector? We're talking about that on the other side, where we are in conversation with Nuvama's Abneesh on the impact of inflation, what's happening with rural demand, and much more. Stay tuned. Welcome back. You're watching India Market Open on a pretty good morning for the Indian markets. But our focus this morning is going to be on the FMCG pack. Now, the face of margin expansion could be behind for makers of staples to soaps as prices of raw materials have started inching up again. Over the last week, we talked about how cocoa prices have gone up, and for chocolate lovers, that's bad news. But there's much more to the story because there are price hikes across the board in terms of input costs as well as commodities. What does that mean for margins of FMCG players? Sesha Sen, my colleague, is joining us with more details. Yes, Sesha?
Right. So if we look at the raw materials, cocoa definitely has seen a threefold surge in costs. But apart from that, wheat, sugar, alkaline, linear alkaline benzene, which is used in detergents, palm oil, even edible oil, all are at a high when compared to the last year. Now, companies, however, would be reluctant to take price hikes, considering two factors. One is the weak demand environment, and the second is the regional competition. So this could pose a risk to the consensus margin assumption. And as companies take price hikes in FY25, that could also be minimal given the intense competition that we are seeing within the industry. Now, for example, the detergent category has seen a 15% price hikes over the last 2 years, majorly in the premium brands. However, as raw materials stabilize, they continued to reduce the intensity of the price hikes as well reverse the grammages. But however, in FY25, the price hikes are likely to come back, and this could definitely pose a pressure on the margins.
Right, thank you for that. That was, of course, the word coming in, or the data on why some of these margins of FMCG companies could be under pressure. Well, Abneesh Roy, Executive Director, Nuvama Institutional Equities, joins in to help us understand the current situation for FMCG companies. Morning, Abneesh. Thank you very much for joining in. Abneesh, I'm not sure if you heard Sesha's link about how raw material prices have actually skyrocketed. It's not just cocoa, but even the likes of palm oil have sharpened in the last couple of months. What does that mean for FMCG companies? Do you feel the phase of margin expansion for a whole host of FMCG companies is now behind us?
Yeah, thanks, and good morning to everyone. Yeah, from a this quarter perspective, Q4, we don't see any major issue of margin pressure, because normally the current raw material impacts with a lag. So yes, in FY25, there could be issue more for food companies rather than household and personal care company, because most of the inflation, which you also highlighted, has been more in the food raw material, for example, cocoa, wheat, sugar, etc. But on the other hand, milk, which is also a key raw material, that is slightly down YOY. So you need to take a holistic view and not look at just a few raw material. On the other hand, for household and personal care, the key raw material is generally crude oil or the crude derivatives or the edible oils. Yes, there is some bit of inflation from the lows, but I would say if you compare that with the peaks which we had seen, for example, crude oil used to be almost like $110 or $120, versus that we are still lower. So it will be a bit of a error to just see from the lows. So I will not be too much worried on the household and personal care companies in terms of the categories. In Q4, I don't see too much of a impact on gross margin. Many of the companies will still see YOY improvement in terms of gross margin. Yes, the extent of gross margins improvement will be a bit lower versus the earlier trajectory, but slight improvement will happen for many companies. Now coming to cocoa, etc., of course, that's used more in the chocolates. Please note that in chocolates, etc., it is largely 2-3 players pan-India who dominate. It is not too much of a dominance by regional players. So we do expect that price hikes will come back for FMCG sector in general, and chocolates and a lot of the food categories in particular. In FY25 for the sector, FMCG sector, we expect 2 to 4% price hike come back, and we don't see too much of an issue there. I agree with your point that yes, the demand side volume growth is a bit soft currently, more in the rural India. Urban volume demand is still reasonably fine. So after FY24, where the price hike for the customer was in fact negative in many of the categories, we don't see an issue of 2 to 4% not getting absorbed. If you see long-term FMCG pricing, there is a 2 to 3% kind of a CAGR in terms of pricing long-term. So after 1 year of a cut, absorbing 2 to 4% shouldn't be an issue. So that should help the top line also. So net-net FY25, we see food companies under slightly higher risk on the margins, but we also need to factor in normal rainfall. So what happens is in raw material, we get too concerned on the current trends and not factoring in the normal. In fact, the monsoon is likely to be higher than current expectation. That could cool down the inflation worries in the second half of FY25. So
Abneesh, let's just break this down company-wise so we have a better understanding of what this will mean for investors in these companies. So stocks like HUL, Marico, Britannia, Pidilite, and some of the paint companies, in my opinion, are the ones that will have to undertake a little bit of a price hike in order to deal with the increase in costs. If that does happen, how constructive are you on these 5 companies they've named, and paint companies as well? We can add to that list because of the increase in crude and palm oil prices.
So I would expect that HUL and Marico and Britannia, etc., the price hikes will come back 2 to 4%. As of now, as I said, in HUL, some bits are of the raw material are in fact down. For example, HUL, tea and the milk raw material will be down, in fact, YOY, while some of the crude related will be slightly inflationary. So I would say that for HUL, not a major concern on the On the margins bit, it's more on the volume growth where there is a bigger concern for HUL. For companies like Nestle, clearly price hikes will need to be taken, especially in the chocolates portfolio. On the other hand, for their milk business, things are fine. In fact, they should see margin improvement. So that's how I would see that, yes, there will be pockets where in the staples, not too much of a concern for HUL, etc. Coming to paints and Pidilite, I would say that, yes, in paints, because Grasim has also come, and because generally 4% kind of a price cut has been taken, currently, the price hike will come essentially in the second half of 25, not in the first half. That's how we see. So Asian Paints, etc., are sitting on the higher margins also. If you see last 3-4 quarters, the margins has been on the higher side. So in H1, there is a chance that, yes, the margins could be under some pressure. We don't see a big pressure for crude-related inputs currently.
Abneesh, morning. Tamanna here. Since you were talking about Asian Paints in that space, do you expect the competition heating up to have any impact at all? And would it be visible in the next quarter, or would you have to wait about 6 months to see impact, if there is any?
Yeah, we expect most of the impact to be visible in H2 of FY25. Because this is a physical distribution. So currently, not all their factories are ready. They are still reaching out in terms of distributors, etc. So Grasim impact will be more in H2. Already, what we are seeing is a lot of the initiatives which Grasim is doing, for example, extra grammage or 5-10% lower pricing than Asian Paint, is something which has been tried earlier by the other newcomers. It has been tried out earlier. Does it really work too much? We don't see that working too much. So I think Grasim will be more of a 2-year, 3-year kind of a impact on the sector rather than too much in FY25. Of course, there will be some market share loss whenever such a large player comes. There will be some market share loss for the incumbents, Asian, Berger initially. But long term, we see that number 3, number 4 player, essentially Kansai Exo, will be at a greater risk rather than Asian Paints. So we see Grasim also surviving long term, but definitely it will be more from a 3-year or 2-year time horizon where the impact will be not in FY25, especially in H1, the impact will be limited from
Okay,
us.
so clear. So H2, FY25 onwards, you'll see impact. If any and everyone will survive, there's enough growth over there. But, Abneesh, I just want to come specifically, and I was going through your report. Highlights rural slowdown is persisting. Urban still leads growth. In that premium category still leads growth. Putting all of those factors together, what would be then your top picks? If you take away the very temporary election surge that you're going to see on some categories, what would be your top picks? And do you expect this trend to continue of slower rural, higher urban and more premium focused?
So coming to the last question first, rural slowdown, we expect one more quarter of pain in Q1. After that, it will be more a function of how the monsoon is. This currently forecast is that the monsoon will be even better than the normal, which I think will be very important because last 1 or 2 years, there has been either shortfall or floods too much. So we need to see quality of rainfall and how much is the versus normal. So I would say that if that is normal and too much floods doesn't happen, I would say that the rural recovery should start from Q2. Already we are seeing some signs of that, but from Q2 it should accelerate. Coming to topics, currently we'll have Pidilite, United Breweries. In the staples, we have Nestle, Godrej Consumer, Dabur and Tata Consumer. These are the 3-4 names in staples. In the discretionary, we like Pidilite and United Breweries.
Right. Thank you for that, Abneesh. Those are a few picks coming in. The Pidilite is one of the few stocks that Abneesh likes. He doesn't think that the current concerns for the FMCG sector are here to stay. Well, in the meantime, the markets have made a new all-time high. At 22,529 was hit just a few seconds ago. Currently, the Nifty is looking very well placed. The broader markets also trading from here off the day's high point back to 22,500 now. Niraj, you want to come in on this one? Significant, I guess, for a few seconds.
Yeah, no, significant for a few seconds, but it'll be interesting to see that if indeed the rates stay the way they are, then what happens to some of those call positions which were written at 22,500 and what kind of covering action comes in there, because that is where the maximum OI concentration was. Remember, the puts are in the money, so there is no problem there. It is the problem for the calls because the trend seems to be good. Remember, we also showed at the start of the trade setup today that April seasonally is a very strong month for markets. 11 out of 16 times, April has given positive returns. On the times that April has given a positive return, the average return for the market is 4.9%. So if indeed history is to repeat itself, then call writers would have the issues at hand currently, because we are at the start of the series currently and already the calls are way out of the money. So therefore there has to be something that will play on the mind of those option writers.
But Niraj, you know what I know on Thursday it must have been NAV management, but very soon after the markets hit that record high, we saw selling pressure come in and ease off. Pretty similar even right now. We've not eased off sharply, but the breadth has deteriorated very little. Let's not. I'm not trying to sort of disappoint our viewers here, but. The Nifty is now sub 22,500. So we touched, it was a touch and go, 22,529 was met and we were back lower. Now 40 points off the day's high point. And even the breadth, which was very biased, and it's still very biased on the upside. You've got about 45 stocks that are trading higher. You've got about 4 to 5 counters that are in the red. But it's interesting, 22,483 now. So pretty much at the day's low.
You'd have to be a brave heart not to give in to the temptation of some sell on rally. So
I mean,
maybe
triggers.
That's what you're seeing in a very short term and specific kind of last few minutes we're seeing. But I think the story also for me is what is happening with the broader markets. Look at the Nifty Small Cap 100, for example. You have 89 advances to 9 declines, and some counters like a Sterlite, Hind Copper, PNB Housing has been on fire since morning. All of them looking really, really good. Media stocks looking good, this morning, and we were talking about how election periods tend to be revenue accretive. Maybe that's why Infosys is a big story this morning as well. For a variety of reasons, banks are looking good. Now, the question really is that how sustainable is this rally? And in the short term, there doesn't seem to be any big cloud on the horizon as of now. Nothing that can really spoil the mood, because you have a big event coming in, in terms of the RBI, and it's expected that they're going to keep status quo as well.
Yeah. So if earnings disappoint, that's a separate thing. But otherwise, guys, think of it, positive CAD numbers for Q4. So the macro seems to be okay. Global growth seems to be okay.
Crude is still okay.
Crude is still okay.
Has been good.
Europe recovery has been strong too.
Good, yeah.
So,
and in a case where recovery looks so good, I'm not sure whether interest rate cuts are coming anytime soon. That's exactly what Powell said as well, right? You can't get ahead of ourselves. And that, while you want to look at the glasses half full, no rate cuts or lesser than expected rate cuts may potentially spoil the party. But for now, we're enjoying what we're seeing on the screen. It's looking good.
That's a June story.
Yeah, we'll worry about it. We'll cross the bridge when we come to it for now.
Today on 1st April, definitely not an April Fool's from the market. This is completely, thumbs up. So it's looking good, and certain counters really popping with good stories to build on as well. Pick carefully, choose wisely in a market like that would be the big question. All right, time for a very short break. But on the other side, we're speaking with RR Kabel. Stay tuned for that and more.
hear me?
So pretty solid gains, must say, to a specific set of broader end of the spectrum stocks. By the way, for as much as one may decry about the Torrent Power recent rally, every 150 megawatt order that they are winning is adding more market cap to the stock. If you look at Torrent Power in the last, or YTD maybe, you will just see the kind of moves that Torrent Power has made. Some extremely strong moves by that. This year is about 52% for Torrent Power, so pretty strong show by that stock. 1428 for that one in today's trade too, or in today's trade, and has gained significantly the last few days. PNB Housing Finance is now up 11.5% on the CARE ratings upgrading its facilities. So started off strong and has inched up even more on pretty high volume. So pretty strong show by PNB Housing Finance as well. So good markets, solid moves for specific stocks. Manishi Ray Chaudhary joins in to talk about some of these. Manishi, good having you. Thanks for taking the time out. I hope all is well. Surprised with the rally, or did you anticipate this?
Well, I mean, I can't really comment on a day's rally.
Sure.
You know, but
no, the last few days, Manishi. We are at new highs. So surprised with the new highs?
Right. I mean, if you look at this year, for example, right from the beginning of January, I think the market has been largely flat. It's possibly at its highest, which is, maybe about 3 to 5% higher than the recent bottom. In contrast, some of the other regional markets have actually moved up a lot more. If you look at Hong Kong, China, for example, from the lows in mid to late January, they have moved up about 10 to 12%. So I think it's kind of, the Indian valuation premium, which India always have had, but that had reached kind of a record levels recently, that is sort of getting evened out as FIIs take a slightly more near-term cautious view about this relatively expensive market and pump more money into the North Asian markets, particularly Hong Kong, China, and Korea. Now, having said this, what we're all talking about here are really the near term, what the market discounts, over the next couple of quarters or over the next 1 year or 2 years. If one looks at the longer term, next 3, 5, or 10 years, then India, and this is a point I have always made, it's clearly a core holding in all FII's portfolio. It has a much larger weight today in the benchmark indices than it used to have, which forces many of the benchmark FIIs to pump more money over the longer term. And the fundamental factors in terms of strong growth, in terms of policy momentum, in terms of, much better balance sheet that the corporate have, all these have fallen into place, which obviously would drive the market over a long term. Notwithstanding these very sharp up moves or corrections that we have seen over the last 3 months, I think, it pays to be bullish on India over the long term, while the tactical concerns or cautions about valuation might persist for some time.
Manishi, my question would be, would you put in fresh money to work currently, or are you on the side which says valuation's expensive, a correction around the corner, let's wait for the dip?
You see, I would possibly have my current positions, maintain my current positions on India when it comes to putting fresh money to work in the Asian or emerging market context. I would possibly be more keen on the cheaper North Asian markets. And not only because of their valuation discount. In fact, there are some pockets, some stocks and some sectors which are ludicrously cheap in these markets right now. But also because if we do see an improvement in the developed economies, if we do see, for example, no recession in the United States and the U.S. economy, the Western economies in general continue to do better, then these globally linked markets might actually do better than a relatively domestic-focused market like India. I would again point out the caveat here is that I'm really talking about maybe the next 2 or 3 quarters, the relative short term. If we do have a narrowing down of India's valuation premium, I think the market would again come back into focus from the foreign institutions' perspective.
Okay. Manishi, where are you most constructive on? Within the existing positions that you said you will stay invested in, what is the biggest overweight?
Okay. The first would be the private sector banks. Some of these banks, not all of them, have underperformed massively over the last 3 years. And many of these are actually good quality banks with excellent asset quality, with good return on assets, and therefore even potentially good return on equity, which the current price to book multiples possibly not really discount fully. That would be my number one bet. Select private sector banks. Second, I would also focus on the capital goods, engineering, industrials, that universe. That's a broad universe, which would also incorporate some of the power sector, both the utilities and the power equipment manufacturers, the defense equipment manufacturers, even though they have done well recently. Because I think there's a degree of growth which we are possibly unable to see right now, but it would play out over the long term. So these would definitely be my top 2 bets. I would selectively look at, the oil and gas space also, particularly the explorers, and maybe a select few consumer discretionaries, maybe on the autos 4-wheeler side.
Okay. When Manishi Chaudhary speaks about oil and gas, amongst other things, you should definitely listen. As I said, amongst other things. Manishi, thanks for joining us with this very quick perspective. Look forward to seeing you on air soon.
Absolutely. Thank you very much.
Well, that's the view from Manishi Chaudhary. Veteran investor on the Asian equities side, used to be head of equities at BNP Paribas until some time ago. Take a break. In fact, wrap it up on India Markets Open. But up next is Talking Point. Mahesh Patil, CIO, Aditya Birla Sun Life AMC joins us. Stay tuned.